Hello guys, today we will do classification of accounts. In order to decide when to write on the debit side of an account and when to write on the credit side of an account, there are two approaches. First one is American approach or modern approach. And second one is English approach or traditional approach. Traditional approach is also known as double entry system. Firstly, we will classify the accounts by traditional approach or English approach. According to traditional approach, we can classify accounts into personal or impersonal account. Personal account is related to an individual, firm, company, or an institution. Personal accounts can be classified into natural personal accounts and artificial personal accounts and representative personal accounts. Let we discuss this one by one. Natural personal accounts means the accounts of human beings. For example, Sohan's account, Mohan's account, etc. Artificial personal accounts do not have physical existence as human beings, but they work as personal accounts. For example, any bank account, any institution's account, etc. Representative personal accounts represents a particular person or group of persons. For example, prepaid insurance account. Prepaid means paid in advance. Or accrued interest. Accrued means earned but not yet received. Next example is unearned commission account. Unearned means not earned. Next example is outstanding salary. Outstanding means due but not paid. Now we will talk about real account. Real account are those things whose value can be measured in terms of money and which are properties of the business, such as cash, furniture account, etc. Real accounts is further divided into tangible real account and intangible real account. Tangible real account are those which we can touch or feel. For example, cash account, stock, etc. Intangible real accounts represent such things which cannot be touched or feel. For example, goodwill account, patents account, etc. Next we will talk about nominal account. These accounts include the accounts of all expenses and incomes. For example, rent paid, salary paid, etc. Now we will see their golden rules. Rule for recording in personal account is debit the receiver, credit the giver. For example, paid rupees 10,000 to Ramesh. Here Ramesh is the receiver, so his account will be debited. Rule for recording a transaction in real account is debit what comes in, credit what goes out. For example, purchased goods for rupees 20,000. Here goods account will be debited according to the rule of debit what comes in, while cash will be credited according to the rule of credit what goes out, and the rule for recording in nominal accounts is debit the expenses and losses, and credit incomes and gains. For example, paid rupees 5,000 for salary. Here salary represents expenses and as such, salary account will be debited according to the rule debit the expenses, and cash account will be created according to the rule of credit what goes out. Now we will go further to modern approach. The rules of debit and credit depends on the nature of an account. For this purpose, all the accounts are classified into the following 5 categories in the American approach. That is assets, liabilities, capital or owner's equity, revenue or income account, and losses and expenses accounts. If assets accounts and losses or expenses accounts increase, then it will be recorded on the debit side, but if there is a reduction in these accounts, then this will be recorded on the credit side. For example, if cash, which is an asset, will increase, then this will be recorded on debit side. But if cash decreases, then this will be recorded on credit side. Next one is when liability account and income or revenue account and capital account will increase, then it will be recorded on credit side, but when this will decrease, it will be recorded on debit side. For example, if proprietor's account, which is capital, will increase, then this will be written on credit side. But when proprietor account will decrease, then this will be written on debit side. Thank you guys for watching this video. If you like this video, please subscribe to our channel.